Good morning, ladies and gentlemen, and welcome to the Totally PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time. Just simply type in your question on the right-hand corner of your screen and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard, and you'll receive an email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and I'm sure the company will be most grateful for your response. And I'd now like to hand over to Lisa Barter, CFO, and Wendy Lawrence, CEO from Totally. Good morning.
Good morning. Thank you for the introduction, and thanks everybody for taking the time to meet with Lisa and myself this morning. We do have a presentation of which we're going to go through, and obviously we will try to answer your questions as we go along. So without further ado. So I think it probably goes without saying that Lisa and myself and the rest of the team, including the board, are really pleased to be presenting the results to you today. A really strong performance during the first half of the year, which follows on from what we thought were a really good set of results for our full year that we presented to you before. Lisa will go through some more of the finance detail with you, but just from a headline point of view, every indicator financially has gone the right way in terms of positive, and we very much believe that this is now our new business as usual. We're trading strongly, we've got continued growth in revenue, earnings and cash. Group turnover was up by 14% to 61.6 million. Had a significant increase in EBITDA profit at 3.3 million. Cash at the bank at 18.3 million, which obviously positions us very well for our acquisitive activity. We are looking to use our own cash for that, and I do know that that's been a question from shareholders. We are not planning to raise additional funds. We will be using our own cash. And the proposed interim dividend has been doubled to 0.5p per share. We also put some different dynamics in there for you this time to try and give you a little bit of idea about the scale of the business. We are UK-wide and in the Republic of Ireland. We continue to grow, and during the period, we assessed and treated more than 1 million patients. You will also see that in the second half of the year, it is likely to be more than 1 million because we generally do have busier periods during the winter. Our urgent care division was awarded extensions to 20 existing contracts, reflecting the quality of service, the strength of the relationship with NHS partners, and you'll see there that that was circa 45 million within the period. We were also awarded a new contract after we'd gone through a competitive tender process for a new urgent treatment centre in King's College London in Denmark Hill. That urgent treatment centre was actually mobilised very, very quickly to get us there and working alongside the A&E department, and we did that in a period of 8 weeks, and is already delivering some fantastic results for patients that are now walking in, and we've relieved a lot of the pressure that particular A&E department was seeing with accident and emergency, and that the quality of what we're delivering there has already been commented upon by the chief executive, which is really pleasing for the staff because they know that they've had an immediate impact on how patients are being seen and treated very quickly. So we're continuing our delivery of services across all areas, underpinning the national COVID recovery, ensuring patients can access services quickly. And that's in all of the divisions. So all 3 divisions are now back to pre-pandemic levels. Our new business as usual model is facilitating growth and opportunities to expand. The increased demand that we're seeing across all our services, we believe, is now here to stay. And obviously, you will have seen in the press every day the pressure that's on there. The winter is actually approaching and the increases in waiting lists. So we as an organisation are very proud of the fact that we sit alongside the NHS to make sure patients are seen quickly, effectively, and access the service most appropriate for them. And that's what we plan to continue to do, not only through the winter but beyond. You will also see in the RNS that we're in advanced conversations with a number of bolt-on acquisitions, confirming again that we plan to use our own cash. And we're very, very hopeful that in the next period, we will be able to update you with our acquisitive ambitions and things that we're looking at, not only in terms of underpinning those areas that we currently work in, but also looking at new opportunities presented to us that would be immediately earnings enhancing for the group. So I will now hand over to Lisa, who can take you through some more of the financial details.
Thanks, Wendy. Good morning, everyone. So we are, yes, extremely pleased to present a great set of interim results. We've maintained the excellent performance of last financial year into this half year, and we're confident that we're now operating a new business as usual in this environment of sustained high demand. Revenue, profit and cash are all increasing and delivered ahead of our own internal management expectations, and this has driven the board's decision to double the proposed dividend to £0.005. We do continue to monitor performance, and as we've said previously, we will continue to consider the level of dividend against half-year performance. So we will look again at the final results and determine an appropriate level of dividend at that point. So turnover is up 14%, up to 61.6 million. That's 7.5 million compared to the previous half year. Urgent care growth is 6% up, whilst planned care doubled its revenues to 4 million and insourcing increased from 1 million to 4 million and is currently delivering around about 1 million revenue per month. Gross profit up 14% to 11.6. This is at its highest level, 18.9%. Our internal expectations were sub 18%, so we're very encouraged to continue to deliver this level of margin. We also see a significant increase in EBITDA profit at 3.3 million, and this is a significant increase from last year. Half year was 2.3, so it's £1 million up. And ordinarily, the second half of the year has higher cost pressure as a result of winter period. And of course, H2 was stronger previously as elective services resumed and access to care improved, and our insourcing business was ramping up. Gross profit, 11.6 million, its highest level, as I said. We're very pleased with the fact that we've been able to sustain this and also see the increase in EBITDA. We've controlled our overheads well also. Profit before tax at 0.9, previously 0.1. Adjusted operating profit is 2.1 million, 1.2 million in the comparable period. This is an increase of 75%. And those of you familiar with our business will be aware that as we gain contracts through acquisition, we recognise the intangible value of those contracts as an asset. And the level of amortisation relating to those contracts in the first 6 months of this year was 1.1 million. And this is what I've added back to arrive at adjusted operating profit. I should also point out that we continue to apply tax relief from losses brought forward from prior years against our corporation tax charge. That's favourable for us going forward also. Cash at bank of 18.3 million remains high. We're not looking to fundraise for future acquisitions at this point. We're accelerating our buy and build activity. We do not intend to sit on this cash. We are seeking to invest it. Underlying cash is 17 million at the end of the period. In addition, August was somewhat lower due to a late payment from a CCG, hence the increase from the 14.8 we announced in August. As I mentioned, the dividend is increased 100% to £0.005. I just move on. In urgent care, so revenues increased. We've had new contracts secured and mobilised. We're sustaining that higher margin, as I mentioned, in urgent care into this year. As I mentioned on the previous slide, the revenue's up 6%. We mobilised 2 urgent treatment centres since half year of 2021, financial year 21. These were won via traditional procurement, so this is the tender, and tender opportunities are still presenting. But importantly, the growth is also driven by the additional support that we're providing to ambulance services. And this is via our National Clinical Assessment Services, the CAS. The CAS sits behind the 111 and provides access to a wide range of clinicians that goes beyond a simple call handling of frontline 111. We've also received additional funding for 111. And this work, the additional work, was gained by leveraging our existing relationships with ambulance services. and local commissioning groups. And this is a good example of how the integrated care system is now working for us, delivers more freedom to local commissioners, and we're building on our current relationships and new ones as well. I should also mention in urgent care that 111 income represents around 20%, less than 20% of our urgent care income. The urgent treatment centres play a very important part in protecting the front door of A&E, and we continue to win contracts for the provision of these services. Planned care service delivery is now fully operational. We've delivered 4 million revenue in the period, and it's recovered back to pre-pandemic levels, although operational delivery of our services has had to adapt for additional social distancing and other COVID-related precautions. Insourcing continued growth. The opportunity remains significant and it's increasing. Last reported waiting figures just for England alone were 5.8 million. We are delivering revenue, as I said, of £1 million a month now. There's some ongoing margin pressure. However, more staff are now based in Ireland, and we are bolstering both our leadership and local teams to support the general demand, not just in Ireland, but here in England as well, Wales and Scotland, of course. The revenue for the half year is 4.4 million compared to 0.8 million in H1 last year. Just finally, in terms of forecasts out in the market, whilst the first half of the year is reporting fantastic results, we are cautious over the second half of the year, particularly regarding uncertainty, winter, availability of staffing, and the rising demand on NHS services, particularly A&E. You've only got to look at the news. So we are holding our position. We expect to deliver at least forecast EBITDA, and this is the reason why we have not updated any forecasts in the market on the back of our H1 results. So I just hand back now to Wendy.
Thanks, Lisa. So I think Lisa's given you a flavour of where we are financially. So we are absolutely trading ahead of management expectations. We're in a resilient position as we enter an uncertain winter. I'm certainly, every time I wake up in the morning and look at what the headlines are, there's always something in there about the NHS or flu or COVID. It's part of day-to-day operations for us. And so please be reassured that resilience has been built into what we do. We know also that the NHS in England has identified significant additional investment. We're not quite sure yet the exact places where that money is going to be placed, but I think one thing is for sure, it will include waiting list recovery, which obviously impacts on our insourcing business. And we believe that they'll be looking at access more generally in terms of how people access healthcare. We all know that primary care has struggled with the pressures that's on now and to meet patient expectation. As Lisa said, our insourcing business is well positioned now and registered on all of the frameworks across the UK and the Republic of Ireland, and so you can expect to see further updates in that. We're also very confident that our new post-pandemic business as usual model is presenting significant opportunities for growth and expansion. There are new areas of demand that the NHS is struggling with, that we, as the business that pride ourselves on being able to support the NHS in those areas, are looking at how we do so. So making sure that we expand and advance our discussions regarding other businesses that may become part of the group to actually make sure we broaden our service offering, but obviously bolster what we're already doing as well. I think I've already said it, but obviously our strong cash position, which means that this presents the opportunity for us to go out there and actually do something interesting, exciting, but again, something which will take the group to the next level. So we are very positive about our outlook. We know that winter brings uncertainties for us, but we are a seasonal business and that's what we do, and we're very experienced in terms of how we prepare ourselves for such times. So that's about it in terms of the presentation from us. And so we've got quite a few questions come in. So if I hold the presentation.
That's great, Wendy. Thank you very much indeed, and Lisa, for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Wendy and Lisa take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and when the presentation's ended, we'll redirect you so you can provide the company with your thoughts and expectations. Wendy, Lisa, I know that we received a number of pre-submitted questions, and you very kindly have provided some written responses, so we'll include those when we do distribute the Q&A later on today. But in the meantime, if I could ask you, there's a number of questions coming from investors. If I could ask you please to read out the question and give a response where it's appropriate to do so, and I'll pick up from you at the end.
Yeah, I will certainly try this. There's quite a lot of questions, so forgive me if I don't get through all of them. But what Lisa and I will do, if I don't get to answer them now, we will try and pick up and give you some feedback from those. So one of the questions is commissioning from NHS is slow in coming forth. This is evident from Spire and Ramsey. You seem to have won numerous contracts this year. Could you talk to how, if any, the commissioning differs between the private hospitals and Totally? With respect to how NHS framework agreements work, is it a similar process? It's quite a different process, and I think I can probably most easily explain that by we're not in competition with the NHS. It is sometimes seen that hospitals are, but we're not. What we do is we sit alongside the NHS to ensure that we support them to manage that increased demand, and that we work with patients to get them into the most appropriate service for them. So if they need to be inside the hospital, we try to make sure that we facilitate that quickly. So we very much position ourselves as a partner, working with NHS systems and processes to enable that. And the way that we work, there are competitive tenders, of which we've already talked about Denmark Hill, and that was one that we secured this year. And then we're also working in the integrated care systems, where again, you go through a process, but it includes a lot of clinical commissioning groups within that, who can then talk to you. So once you're on that system framework, anybody within that can actually come and talk to you and secure service. And so we do work in a different way. Is it easy? No, it isn't easy. But again, your reputation goes before you. And if you can build a reputation of being reliable and delivering, those conversations are often easier to have. And certainly with the most recent urgent treatment centre, it's probably worth saying that when they published the specification for the service they wanted, our medical team were quite concerned that it didn't actually get to the heart of what was actually needed to make a real difference to patients. And so we went down and had a face-to-face conversation between our clinicians and the clinicians down at Denmark Hill, and actually agreed a change to that, where they actually embraced what we were suggesting. And that also influenced the financial model to be much more resilient and focused in terms of delivering that high quality service for patients. And I think as long as you can keep your eye on that and you can demonstrate the impact of what you're doing, the NHS is very, very receptive to that way of working. And so it is different. But there are still processes, of which they are competitive processes, of course. But we've got great confidence in the models that we're delivering, and as I say, the quality of the service that we provide, including CQC ratings, which we haven't mentioned during this presentation, but is normally a line in there where we remind everybody that all of our CQC registered services do remain as good, which is a fantastic achievement for the people on the ground. So that's a reflection of what they do, not necessarily what we do. We just set the standards and they get on and deliver it. Wow, there's loads more questions while I've been talking about that particular one. So I will try and go through them. Are the continuing COVID issues restricting the contracts THC can win due to restrictions on access to operating theatres? No, generally not. Although we are beginning to see a little bit of that happening. So, for example, we do operate one contract in the West Midlands where it's not a weekend-only contract, it's 7 days a week. And we are seeing now some days where that contract cannot work due to the pressures on the hospital and their own capacity. So, Will it become an issue for us? I think we may well have a few hospitals that struggle with capacity, but we also do work at a lot of hospitals that don't have A&E departments, so it's a lot easier for them to manage their day-to-day stuff. What we are doing with our insourcing business, because it was a startup back in October 2019, obviously as we grow, we're having to invest back in infrastructure, and that's not only on people, but also knowledge, skill, experience, expertise. We're working now across the UK. We've got multiple contracts in England and Scotland, Northern Ireland and the Republic of Ireland. So we are reinvesting back into that, bringing in extended skill and knowledge. We're also working in multiple specialties. And so obviously as you grow, to maintain the quality of the service that you're doing, which is imperative for Totally, we'll never compromise on that. We are going at a pace of which we know that we can guarantee that infrastructure remains strong. Thanks for the congratulations as well to the team on a great first half. It really is nice to hear, because it is, this isn't easy. If it was easy, everybody would be doing it, but it's nice to see those results. In terms of margins and margin improvement, obviously the way that we work and the different divisions have different margins, and you will see, and Lisa's already covered the fact that insourcing has grown massively compared to the previous reporting period. That is a higher margin part of our business. The lowest margin part of the business is 111, as we've said before. Urgent treatment centres are better, and so as you see growth in other areas, obviously margin improves, and we are also looking at how we diversify that model to make sure that we've got our continual eye. But margins are going the right way, and that's what we continue to try to do and deliver. Do you foresee any earnings enhancing acquisition taking place in the second half? I'd be very disappointed if we didn't. We do expect to update the market on that during the next reporting period, and we've already said we're in advanced negotiations, and so watch this space, please. And I think we're very excited by the things that we're involved in at this moment, so we look forward to sharing those with you. There's some questions in here on finances. I'll come back to those in a minute once Lisa's had an opportunity to read those. So how much of the cash held on the balance sheet? I actually think that Lisa answered that. So we do get paid in month for the activity that we provide in that month, and we now have an underlying balance of cash that is ours of just over 17 million on a regular basis. But obviously we are cash generative, so that figure does go up and down, but all of that cash is our cash, and we are looking to use that for acquisitions, as we've already talked about. Do you think the number of vacancies will lead to an increase in staff costs? Also, can an increase in staff costs be recovered from existing contracts? So two questions within there. Annually, we review our contracts with the NHS, and we always talk about changes in any pay pressures or any other pressures, and we negotiate those as baseline. So within the contract, there is a freedom to do that. Do we always get full inflation? Do we always get full pay inflation? Not always, but more often than not, we do. And that's the way that the contracts are actually established to do. So we cover that off. Like every other business, we have vacancies. Turnover is always much higher in call centres. 111 as a call centre activity. It's a very demanding job, and it's not for everybody. It isn't an easy job answering the phone to people who are generally in distress and seeking help. But we have a continual recruitment campaign for call handlers. We've got our own in-house recruitment team. We also use recruitment agencies. We've reviewed our terms and conditions and of employment, and also our benefits package. And whilst we can't compete with NHS pension alone, we do make sure that we are competitive and attractive as an employer, and try and engage with staff to ensure that they want to stay with us. So I think it's one of the things that every business is tested by, isn't it? Coming out of the pandemic, getting people to work, new business as usual. We are busy, it's demanding. but I don't think it's an area that we're over anxious about at all. And certainly within our financial planning, we do build in resilience and provisions for anything that we have to address to do with staffing. Allenby have put a fair value at 65p, nearly double your actual share price. What are your thoughts on this, and what are you considering to address the differential? I think it's we have no control over the share price, no control whatsoever, sadly, and we always remain very, very focused on the fact that we have to ensure that we deliver the best we can from the business, and that our financial performance and quality performance continues to be ahead of the expectations that we set for our audiences. So whilst it's frustrating and we are aware of the share price, it is not something we've got direct control over. So we just hope that by continually over delivering on market forecasts, by updating the market in whatever way we can, by looking at how we get our messaging out so that people understand our business model a little bit better, that eventually the share price will reflect where we think the value of the company should be. But yeah, it's a hard one to call, and I'm sure that other people share my frustrations with that. But no direct control, but we will continue to deliver. Where we can, we will over-deliver. We'll bring some exciting things to the market, and hopefully, as I say, things will respond, but we don't have any control over that. Can you talk a bit more about your M&A ambitions, which areas of interest? Just lost that one as it's whizzed up the screen, and how that would be additive to the overall offering. We're certainly not short of organisations coming over our desks at the moment. Lots of companies in our sector did benefit from the pandemic, but obviously as COVID restrictions ease, those things change. We were in a particular good position because we worked shoulder to shoulder with the NHS during the period, and so we've continued to grow from that. What we always do is we look at things that earnings enhancing for us, that can add to what we already do, either in a quantitative basis or whether it is in a quality basis, bringing in new skills, new knowledge, a different sector for us to actually concentrate on. And this time, interestingly, we're looking at new opportunities that have arisen really on the back of the pandemic. There are new demand and pressure points placed upon the NHS that we routinely haven't got involved in before, but we've had acquisitions presented to us that are really interesting. I am hoping that when we do present that activity to you, that you will see the exciting opportunities it presents. We certainly won't be bringing in any companies that require shoring up or financial prop up from us. We will be looking at organisations that can immediately add to our bottom line and present us with opportunities for good growth in the future. So, and like we've already said, I'd be very disappointed if we weren't able to do that in the second part of the year. There's also a comment here about, can we provide what net margin you build into your contracts? The simple thing is no. It depends on the contract itself and what area it is for. And also, a lot of the time we can't dictate the price that the NHS want to pay. And I've already gone through the fact that with King's College, when we challenged them on the patient model that they put out, because we thought that we could do that better and deliver, what you can do and how you can do it better, we could influence the price. So for us, patient quality's got to be at the heart of what we do. We will not go through a tender process where we do not believe that what's being tendered is achievable, good for patient care, or actually going to be a contract that is workable for us in the future. We would rather just not go down that avenue, because it opens up issues for us, for the commissioners and for the patients. And quite honestly, we don't need to do that. We've got an organisation now that is known for the quality that we deliver. And, you've come back at me and said, you can give a range though. Of course I can give a range, but it's going to vary somewhere between 5% and 30%. And I think that's the basis. We wouldn't go for anything that was loss making, and we'll do as much as we can. In insourcing, our margins are up to 33-34%. In urgent care, they're down to 7 and 8, and it really does vary across that boundary. So I hope that helps a little bit. So go on.
Just one point to add, and that is with most of the NHS contracts have inflation in them for us as revenue as well. So we have cost inflation, the NHS has cost inflation, and they actually pass that on through revenue in the contract. So a lot of our NHS contracts, all the standard NHS contracts, are uplifted by inflation every year, regardless of if it's a 3-year contract or less. So obviously that's when we're contracting with the NHS.
There's another question just come in, and thanks for that, Lisa. Congratulations on another excellent set of results. You're understandably cautious about H2, but should the NHS have a relatively good winter, is there potential for full year forecast to be upgraded? The board look at our performance every month. Winter is very much an unknown beast always in the healthcare sector, and I think particularly this year with COVID, and as we're coming out of restrictions, but also flu was a non-event last year, generally because we were in lockdown, but we are now seeing an increase in flu cases. So the board will continue to look monthly and monitoring our finances, and obviously we will work within AIM rules and regulations that if we believe that we're going to be better than the forecasts out there, then we would look to upgrade those forecasts. At this time, we're just being a little bit careful about what we do, because what we wouldn't want to do is upgrade and then have to change that position, of course. But it's certainly an interesting time, but one that we believe we're well prepared for. Are we experiencing staff shortages? There is never an answer for that. We always have vacancies. We always operate with vacancies, but we also have a waiting list of people to join us. So, for example, in insourcing, where we don't employ people, but they come and work with us on a sessional contracting basis, we've got over 800 staff registered on there, and so they're waiting to work with us. We always have vacancies in 111, where we are always looking to bolster our rotas to ensure that we can flex that depending on the demand. Are there any vacancies or staff shortages that are worrying me at the moment? No. We've very much always adopted a multidisciplinary approach to all of our medical teams and all of our clinical teams. So you will see us generally recruiting continually to bring in doctors, nurses, advanced nurse practitioners, emergency nurse practitioners, pharmacists, and we also work with universities where we bring people into the business as they've qualified, and they are tied into the business for a period of time through the work that we do with universities. So we do try to grow our own as well, and try to be that way where you can actually work with individuals and build them and invest in them as well. So that's always a good one for us. Just going down. Your liabilities in theory outstrip your cash. Can you explain again why this is not a relevant number? Lisa, I'm going to talk to you about that one in terms of how you manage that. But I think as well, just getting closer to it, anybody that's worked in healthcare also knows that swing in months, but Lisa's way more qualified than I am to talk about that.
Yeah, I mean, it's the answer that I give every time. I'm unfortunately sorry to disappoint anybody. I mean, we are prudently provisioned organisation. Every healthcare business that I've worked in has the same approach. We are highly provisioned. What I am happy to share is that our trade payables, consistent with this time last year, are at 5 million.
Lisa, as well, there's a question that talks about what are payables, what a breakdown of payables. Can you just give people who are on this a headline, not all of them, but just give a headline of what features in the payables?
Yeah, I mean, it's as I say, we have some deferred income that reasonable level. We have much less accruals than we used to have in terms of KPI penalties, but that's always something that we provision against. We've been cautious around revenue that we recognise through the COVID period. We're still having conversations with commissioners. Obviously, if those conversations conclude positively, then that revenue will be released. As I say, out of the 28 million that we have at the end of September, 5 million of that relates to trade payables. So that's your bit with, obviously agency for us. And we have a lot of personal services companies. So the GPs and consultants are paid as individuals. We also have within accruals a fairly significant accrual for the cost of staff. Our bank staff are paid in their overtime is paid in the following month. And in addition, we have a lot of suppliers. I mean, our main cost is, of course, staff. So there's high accruals for that. We've got lease liabilities. They're less than 1 million. So, and our HMRC liability, it was quite high, obviously, last year because we deferred some of the payments. But we at this time last year, obviously, we trued it up at the end of the year, so we were clear. But the normal is about 2 million. So, yeah, our accruals and deferred income is significant at around 20 million at this point. So
it's nothing. It's a normal way of working for businesses such as ours, which are heavily staff-led business. So it's not anything that concerns the board. And I think investors should be reassured that everybody that works in this business knows what they're doing. And I think we've proven that every time we sit in front of you in terms of we've not only delivered the forecasts that are out there, but generally speaking, we've over-delivered, and we have absolutely no intention of changing that. So no, there's another question. Does revenue tend to be loaded towards H1, H2, or is it?
Yeah, this is a revenue question, kind of. Well, it's a seasonality question that's easy to point it to revenue, but actually for our margins, it's actually the cost pressure that's more seasonal and it hits us in the winter.
Yeah, we have revenue is pretty stable, isn't it? So yeah. The fact of that in winter the activity is higher because the demands on the increase. So you tend to see more patients in the second half, which means the number of staff that you have working, your rotas are much bigger in 111. You know, if you think about 111 becomes the access point, doesn't it, for the NHS during bank holidays and weekends. And if you think during the Christmas and New Year period, it's the heaviest period of bank holidays, and our staffing, our rotas actually double in size during winter compared to summer. It's been a bit different, obviously, since the pandemic because the demands are on the service altogether. But revenue tends to be similar, but in terms of our cost, the cost is very, very seasonal. And thank you very much for the person who is putting the things up here telling me that the share price is increasing as we are speaking. That doesn't mean that I'm going to drag this on forever. I'm sure you'll all be relieved about that. So, I mean, I think there are a couple of other questions on there that we will come back on because I think they are a little bit more complex than just talking around them on here, but we will come back on those. I think, again, you come back to me on the 5 to 30% margin, interesting. So will you get the margin up on existing contracts? We are always looking at margin. You have to understand that the NHS has a price that it will pay. We then have to decide whether that is something that we want to work within or not. And as I say, we will not work within a contract where it is loss-making, but we will always look at how we can deliver quality, but within the price of the contract. And you will see that we are also growing rapidly those areas of the business where the margin is higher. But it is also necessary to stay in some services to make sure that you can then benefit from offering different services. Lisa mentioned, for example, that we are now working with a number of ambulance services, not only to provide clinical assessment services into 111, but also their 999 service. That hasn't come about by tender, that's come about by word of mouth and the quality of what we do. That's what makes us different to other providers. They know that they can rely on us, and they know that what we deliver is quality, and that is always going to remain our focus. So thank you. I can't see any more questions on
No, Wendy, Lisa, thank you very much. You've been very generous and actually addressed all the questions as they're coming from investors. And thank you to everybody that has taken the time to submit questions this morning. Wendy, Lisa, I know investor feedback is important to you. I'll shortly redirect investors to give you their thoughts and expectations. But I guess before doing so, I just wondered if I could ask you for a few closing comments just to wrap up with. And then, as I say, I'll give investors the opportunity to give you their thoughts.
Thank you very much. Just thank you everyone for taking the time to listen to us today. For those of you that are already invested, thank you very much. We believe that we've got a very exciting future ahead of us and that you will not be disappointed. For those of you that are listening in to see if you're interested, Lisa and I are always available if you wish for any more information from us, and we will be putting more stuff on our website. We're very excited about the future. We are really pleased with the results. We believe that the interim results are as strong, if not stronger, than the year-end results that we put out last year. We're very confident in what we're going to deliver in the next reporting period, and also very excited to update you in the conversations that we're having regarding our buy and build strategy. So on behalf of myself and the board, and particularly Lisa, thank you very much for your time today.
That's great. Wendy, Lisa, thank you once again for updating investors this morning. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team at Totally PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Good morning to you all.